play their tune, dance to the beat of the dead balloon. Find a rise, find a rose, currency flows where the data unfolds. Find a rise, find a sing, money moves on, invisible strings. Find a rise, find a road, currency flows where the data unfolds. Find a rise, find a sing, money moves on, invisible strings. Jars scream silent, they don't know. Numbers hum where the cold winds blow. Trade winds shifting, feeling low, high, low. Eyes on the heels, watch them rise. Fed whispers truths wrapped in disguise. Find a rise, find a rose, currency flows where the data unfolds. Find a rise, find a sing, money moves on, invisible strings. Sleepy burns like
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello, everyone. Good morning. How are you all doing? If you can hear me, see me, say yes. Let me just move some things around. Okay, I will check your DM, John. I will definitely take a look at it. Let me just make sure that I see your message. But good morning, everyone. If you are watching this gold move, trading this gold move, give me a 1. If you're not touching gold, give me a 0. I want to see 1. If you're trading gold, watching gold, this gold move, give me a 0. If you're not in it at all and you're just sitting, on the sidelines watching all this crazy volatility. All right, Jim is trading gold. Good morning. Cheryl's trading gold. John, I don't see your email. Can you please email? Sorry, I don't see your DM on the course platform. Can you please email me at Kathy@bktraders.com and I will check it. All right. We got ones from Miguel, Peter, Zero for Miss Actor, Efron, Jiming. Sounds like it's 50-50 here with you guys. If you're not trading gold, what are you trading? NASDAQ? NASDAQ is on the move as well, but there's nothing more exciting than gold. But of course, that volatility comes with a lot of just uncertainty, because if we had a 10% drop this morning, followed by a 9% pop, you couldn't put your stop at the right place. If you're prop trading, you almost certainly would have hit either your profit target quickly or your drawdown limits. Either way, this is the type of vol where you either have small positions and you're in and out quickly and you're ready to bail on the turns, or you basically stay on the sidelines and trade something else. But it's hard to stay away from these big moves when there's so much opportunity as well. But it seems like you guys are half and half of you trading gold, half of you are just on the sidelines. This is a big week in the markets. It's not just about gold. It's going to be about the dollar, stocks. We have earnings from Amazon, Meta, both or Alphabet. Both of them, is going to have, meaningful impact on the NASDAQ. One of the interesting things that we saw last week was kind of divergence between US 30, Dow, and the NASDAQ and S&P. We may continue to get that this week, but I'm not sure. We are seeing, liquidation. We did have some limit downs in Korea and other places. So there's definitely a sense of risk aversion and fear in the markets. And that's part of the reason why we're seeing all this vol in gold, because traders, investors, they haven't quite bailed out of the fear trade. They're still very much in it. Before I get into it, I want to say hello to anyone who's new. If you're new, type in hello. If you are coming in after meeting us in Florida this weekend, I want to hear that too. We had an incredible event with Max, Big Daddy Max in Florida. And what's really cool for all you guys is that if you attended Prop Trader Fest, give me a hands up. Let me know if you attended Prop Trader Fest, not this past Saturday, but last Saturday. Give me a hands up. Let me know if you attended Prop Trader Fest. If you didn't, no big deal. Come on, I want to feel some love this morning. Let me know. Talk to me. Did you attend Prop Trader Fest last 2 weeks ago? Yes. Okay. Cheryl attended it. I know Cheryl wasn't the only one there because we had thousands of people there. The Faceless Man, awesome. Jim Tang. The good news is that we met a lot of great traders that we're hoping to bring to the next Prop Trader Fest. And it's not really just about prop trading. It's about trading, period. These strategies, these techniques, these tips is something that you can trade, all the markets. And so we met some really amazing people that we're looking forward to bringing to Prop Trader Fest, 2.0. So I'm really, really excited about that as well. But regardless, we're back in the markets. It's a big week. And, one of the questions that people is asking is, what's going on with the U.S. government shutdown? We have non-farm payrolls due for release on Friday. If you remember in 2025, a lot of data just didn't happen, right? When we had the U.S. government shutdown. When the U.S. government shut down, a lot of data was delayed, postponed. Is that going to happen with Friday's non-farm payrolls report again? Is that something that, we're going to have to wait on? Who's wondering that? Do you want to, what do you guys think? I mean, based upon the headlines, they are very likely to reach a deal on Tuesday. But this is what you need to know. If the U.S. government shutdown ends Tuesday or Wednesday, we're going to get non-farm payrolls. If the shutdown persists and the U.S. government is still shut down on Thursday, we're probably not going to get non-farm payrolls. So that's basically, the timeline. If I'm going to type this in here. If U.S. government is shut down ends Tuesday or Wednesday, yes to NFP. Okay. I'm going to add this to my screen. Give me 1 second. Yes to NFP. If it persists to Thursday and the US government is still shut down when you wake up Thursday morning, then probably no to NFP because the Bureau of Labor Statistic is shut down right now. But if they come back on Tuesday or Wednesday, they'll have enough time to compile the data, which they've pretty much done already, to produce the number for us on Friday. But if it's not, then we're probably not going to get it. And we're going to be back in this ugly cycle. And probably something more serious is going on because they just can't reach an agreement. And this is going to drag on longer, leading to more pressure in stocks, more rally in gold, more pressure on the US dollar. So I'm just typing in the Fred. I've just got the little banner up. I haven't shared my screen yet. Now, in terms of JOLTS, the JOLTS report is due tomorrow. I think you're right, Ben. In terms of the JOLTS report, it is due tomorrow. And, let me see. I'm just going to check. So far, right now, it seems like it could still be released, but it's hard to tell. If the shutdown ends today, it's definitely going to be released if they sign an agreement. But if they remain shut down tomorrow, then I'm not sure, honestly. We'll have to see. If it's shut down tomorrow, it's probably not going to be released because there's no one out there, no one at the Bureau of Labor Statistics to push the button to release it. But I don't think it's going to be as market moving as NFPs because everyone already knows that according to the jobless claims report, jobless claims have been very, very low. So we're not necessarily looking for a very game-changing, shocking NFP number. But NFPs still matter. We're still going to get some movement. And so, that's really going to be the main focus of the markets. All right. So let's get to some charts and, start typing on the screen. I think we've chit-chatted for a bit. All right. So I am going to share with you my screen. In the meantime, I want you to type into the chat, what you think is going to be moving markets this week. Hold on one second. Let me share my screen. All right, here we go. Let's hide this. What's going to be moving markets this week? Well, first off, what are we watching? Let me just make sure. Okay, here we go. The number one thing that we're going to be watching today is non-farm payrolls on Friday. Now, of course, it may or may not happen. This is just in terms of data. Number two is we've got earnings from Amazon and Alphabet. I think Alphabet happens before Amazon. Number three, we have Middle East. This is one of the big stories today. This is the reason why we had the rebound off of the lows in gold. With the rebound off the low in gold, it happens because right now, according to the headlines, Trump is saying that, there is aggressive discussions and talks happening with Iran right now. So it's creating hope that the deal could be reached. And that is another reason why, if you look at in my right-hand corner, oil prices are down 5%. Oil prices are down 5% because there is legitimately hope for a Middle East deal. Now, we know that this can go back and forth a lot. And I'm going to Dubai, at next Monday. And I sincerely hope there is no war and that there is a deal because I won't be able to come home. But, we're certainly hoping for a deal. Number one, U.S. government shutdown, likely to end Tuesday. And if it does, it's a short-lived shutdown. So, it won't have as much impact as, the previous shutdown that we had with the economy. So definitely take a look at that. By the way, Boris, if you're listening in, if you want to put it up, the details, this stream today is sponsored by our partner, Ola Prime. And they're the prop firm with the fastest payout. So definitely check them out. They got, you can get 30% off with our code EDGE. All right. What else is next? We've got ECB, BOE, RBA rate decisions. None of these central banks none of these central banks are expected to change interest rates at all. All of them are expected to leave interest rates unchanged. So that is not necessarily going to have too much of an impact on the markets. Fred asked, Default Name asked, are they going to keep increasing gold intraday margins? And with the gold intraday margins, the CME has already hiked gold and silver intraday margins, which is part of the reason why we had this huge drop in gold, which is why gold dropped 10%, because people were getting either stopped out or need to get out and liquidate because of the increase in margins. So yes, I mean, that's a pretty big deal. RBA might hike, but I think there's so much uncertainty right now. They're probably more in wait and see mode than anything else. We do have, and my friend Ben is absolutely right, we have ISM services and manufacturing. ISM services is more important. The ISMs are really great because NFPs, first of all, regardless of what happens, if the US government is shut down or not, ISM will be released. It's a separate company, it's a separate entity, unaffected by US government shutdown. And the ISMs always give us the most up-to-date look on how the economy is doing, whether or not the service sector activity improved or it didn't improve. So definitely check that out because this is going to be very, very important. All right, am I missing anything, my friends? We do have employment reports jobs reports from Canada, New Zealand. Those are going to be very, very market moving for Kiwi as well as CAD. And then we also have one more thing. We have Eurozone inflation data. So these are all the things to be watching this week. So we're watching the move in gold, we're watching the move in stocks, we're watching the move in dollar. The question is, how will these things affect the moves that we have seen already? So, with non-farm payrolls, the most important thing to do is look at what is the market expecting. Non-farm payrolls on Friday, the market is expecting a pretty, grim number, 67,000. 50,000 job growth the past month, 67,000 for this month. That is what the market is looking for this week's non-farm payrolls report. Boris, can you check the Discord? I'm texting you something. But so, this is not a good number, right? This is not a good number at all. This is the low 100,000 is probably, basically, if we get rid of this, we would be below 100,000 for pretty much 3 months in a row. And so these are pretty ugly numbers, and all of this tells us the labor market is not doing well. But the most important thing to really pay attention to is, does the market care, right? The Federal Reserve, they met last week, and Powell didn't unveil anything. It was actually slightly, the comments on the economy, inflation was slightly better. But right now, the next meeting is in March, and we're looking at the CME Fed Fund futures. The market is pricing in an 87% chance of interest rates remaining unchanged in the March meeting. So 87% chance of the interest rates remaining unchanged. And so, that is definitely something that is definitely something that tells us they're not expecting anything. In fact, the market doesn't think that there's a meaningful chance. I mean, it's 70% chance in April. It's really June when they think that it's over a 50% chance that they're going to get a Fed interest rate cut. So based upon Powell's language, the market doesn't expect it. But if this number turns negative, if we get, or not, I don't even think it needs to turn negative. If non-farm payrolls is at 25,000, I think it's going to scare a lot of people. And I think that is going to cause those Fed Fund futures odds to change quite a bit. And that could really send gold skyrocketing, because if the market is looking for interest rates to go down sooner, that's going to mean a weaker dollar. and that's going to cause gold prices to skyrocket. And then if we have um, if we have the unemployment rate, that's something you have to be watching as well. If the unemployment rate ends up improving, that could help things. But really, the most important thing is the average hourly earnings, whether Americans are going to be making more. So there's a lot of different pieces of puzzle. We're going to be live trading it with you on Friday. Make sure you come to our live trading NFP session on Friday. It's going to be very, very important. So back to this. Non-farm payrolls. Bottom line, I don't think it's going to affect the markets at all. Front of the week, it's only going to be about Friday. And Friday, it's all about live trading, NFPs. I don't think it's going to cause any lead up and any moves, in gold or anything. Earnings will be important because Amazon, Alphabet, they're coming out. They're going to affect stocks. It's going to affect risk appetite. It's going to affect gold and the desire for diversification. Any headlines relating to Iran-US talks is definitely going to impact gold. I put up this post on X on Sunday. I'm going to share it with you in a minute. And talking about what really triggers meaningful turnarounds in gold. And where is it? Gold. I wrote how this is what it took to kill the last 4 gold rallies. Now, someone in the chat, in the comments, said to me, if you look at the chart closely, it still went up, right? I mean, it was just a blip on the screen. While that may be true, these corrections were 30 to 50% in percentage magnitude, which means that, yes, it ended up rallying anyway, but 30 to 50% with basically flat movement for years after that. Means in sitting in your chair, real life terms, that the gold rally was over. Gold entered a bear market and people didn't trade it for a very long time. So while if we look back at a 50-year chart, yes, it is still in the long-term uptrend, but most of you would not still be holding your gold position from year 1 to year 50. So what did it take? In 2020, it took the COVID vaccine. In 2012, it was the EU debt crisis being resolved. In 1980, it was the Volcker interest rate shock, where you may not remember. I mean, who remembers how high interest rates went in the 1980s? And even if you don't remember, who knows how high interest rates went in the 1980s? Type in the chat. Let me know. Do you remember how high did interest rates go in the 1980s? All right, let me know. I'm going to pop this question for you. If you don't know, put a question mark. I'm happy to answer it. All right. If for those of you that don't know, John says 19%. Default says 16%. Fred 6% question mark. TNL Global said 19%. It went to the 20-22% range, but in real terms, 19%. Bottom line is it was very, very high, well above 6%. Imagine today, if we even had 15% interest rates, how that would feel. And it went much higher than that. First of all, you're going to be putting your money in the bank for sure, right? Forget about gold, which doesn't have any interest rates whatsoever. No, it was not Greenspan. It was Volcker. You would definitely be parking all your money in the bank because gold has no interest rate. The one reason why gold rallies when it has no interest rate is because people think that the value of the dollar is going to go down and they think interest rates are going to go down. But when you have 15, 16, 17, 18, 19% interest rates, money is going in the bank. So when Volcker had the interest rate shock in the 1980s, that killed the rally in gold. And also with Nixon, when we had, during Nixon, when we basically had a lot of uncertainty in the markets. And, that was when, we had a major gold run as well. He resigned and he basically ended the dollar's convertibility to gold. The market in gold crashed. So quick history lesson, but why does this matter? What could trigger the turnaround in gold. And actually, you know, one of the comments in this chat said it all, which is that it could be US-China trade deal. Yeah, that would be great. Russia-Ukraine peace deal. That would be great too. US-Iran deal. Absolutely. If we have peace in the Middle East, peace in Russia and Ukraine, if the tariffs are completely repealed and the tariffs are completely taken away and there's no more threat of future tariffs, yes, those could be the world-changing events that could trigger a permanent sell-off in gold. Now, this Fed stops QE, starts to raise rates. Yes, it could happen, but this is very unlikely. Although, you know, all of this, some of this is likely, some of this is unlikely. It's hard to tell. Regardless, the point is, if we get tariffs repealed, which is possible, you know, anything is possible for Trump. If we get peace in the Middle East, that's possible too. If we get a major US-China trade deal, that's possible. Although I have to say, if you've been catching the headlines this morning, this whole thing, this whole headline, I don't even know where it is, but the whole, here it is. Trump launches $12 billion critical mineral stockpile to counter Russia. If talks with China were going well, I don't think that steps like this would need to be taken. And so this suggests to me that talks may not be going so well. China is actively engaging in trade deals with a lot of different countries, or the other way is probably better said. Nations or regions like the EU are engaging with active trade deals with China. And so, you know, they're engaging in active trade deals with China. That could very much piss off Trump. And in retaliation and retort and response, whatever word you want to use, he's launching his own mineral stockpile program. And so this does not tell me that things are necessarily going well. And so that is why the gold rally could continue, because, you know, these are the things that have driven gold higher and could continue to drive gold higher. U.S. government shutdown, that's good. I mean, I'm pretty sure that's going to be done with this week. ECB, BOE rate decisions, we'll dive into that later. It's not going to matter for gold. ISM services, important. 678 is more rest of the world, but not so much for gold. What does matter is what's going on in the U.S. dollar. I mean, what's going on in the U.S. dollar, my friends? Let's check out what's going on in the U.S. dollar. And with the U.S. dollar, you can see it's a daily chart with a huge move, sell-off in the U.S. dollar. And, you know, now we're seeing a rebound. We're seeing a rebound because Fed Chairman Powell's Fed chair pick, Trump's Fed chair pick, the potential for Kevin Warsh to become Fed chair is the least of its option. That triggered a turnaround in the dollar, leading to a further rally in the dollar. But there's a lot of reasons for why, you know, why the dollar will fall this year. The most important of which, I mean, there's a couple of reasons, you know, let's outline them. Why could dollar fall this year? Number one, Fed is probably going to be the only major central bank to be cutting interest rates. Part of it may be economic, a large part of it will be political. Number two, we have, you know, basically the, you know, ongoing US dollar, what's the right word? Diversification, I guess, you know, investors selling US bonds, diversifying out of US assets. We're going to have more fiscal troubles in the US that could lead to a bond sell-off. You know, all of these are potential reasons why the dollar could fall further this year. And, you know, data could weaken. It hasn't weakened quite yet, but we could get weaker data. And more importantly, we could get stronger growth abroad, especially in the EU and countries that are doing more direct trade with China. We could see all of this lead to a weaker dollar, stronger currencies elsewhere. And the most important, of course, being number one. And if that's the case, then we'll probably end up seeing the case for the case for a weaker dollar is very much there and very much strong this year. And all of that is part of the reason why, for the time being, we could see gold prices extend its gains. Oh, I forgot one. The one that I forgot is probably one of the most important, which is that Trump favors a weaker dollar because it's good for growth, it's good for exports, it helps the US economy. So, all of this is reasons why why many investors could be looking to sell into this rally. However, this rally is very small compared to, if we go to the weekly chart, this rally is very small compared to how much we've fallen in 2025. So we could get to this region here, which is about 100, before it ends up inviting sellers once again. So keep an eye out for that, because this is a very, for those of you that, watch candlesticks, and candlesticks are very important. This is a reversal candlestick. And so this is a very, very positive reversal candlestick that could easily take the dollar up to this region here, like 99, 100, before it dips lower again, because you have to take the previous move into context as well. All right, so with that in mind, what's on the calendar? Let's take a look. In terms of what's on the calendar, there are 3 central bank rate decisions. There's the RBA rate decision, and one of you are correcting me from earlier, which is that the market is expecting, Paolo's pointing out that the market is expecting a 67% chance of the RBA raising interest rates. And it is true, I don't think they could. I think that they're going to hold off on raising interest rates. Yes, inflation has been quite a problem, but the stronger currency is also hurting the economy. I personally think they're going to hold off, but we'll have to see. But yes, there is a chance that the RBA is the only central bank that could potentially raise interest rates. I don't think that they're necessarily going to be raising interest rates, but I do think that it could happen. So Reserve Bank, so Aussie had a very, very nice run, so they could potentially raise interest rates. What else? We have the ECB. The European Central Bank is not expected to raise interest rates, but there is a possibility that sometime this year they could raise interest rates. And then the Bank of England is also not expected to raise interest rates. I think pound's going to fall a lot more than the other major currencies. Hold on. I am being asked by CNBC whether I want to be on CNBC today. Hold on. Hi. What time are you thinking? Okay. What do you think? Should I be on CNBC today on Closing Bell with Melissa Lee and Michael Santoli? They want me to talk about Bitcoin, though, so I don't really want to talk about Bitcoin. I wish they would ask me if I want to talk about gold or the dollar, but we'll see what they say. Pierre says, yes, go on CNBC. Tien says, go on CNBC. I'll let you know on social whether I'm going to go on CNBC. But if it happens, it's going to be on Closing Bell between 4 to 5, talking about Bitcoin and crypto. Bitcoin's going nuts, right? But, for me, it's the least interesting move. Gold is much more interesting. All right, look at this. I'm feeling this love. All you guys are saying, do it. Go on CNBC. Who watches live TV nowadays anyway, right? But okay, maybe I'll do it. Anyway, you guys are much more important. I'll talk to you. Okay, so what are we talking about? We're talking about 3 interest rate decisions. That's going to be very important this week. But RBA is the only one really expected to move, but interest rate decisions are always important and always market moving. So for my BK traders, we're going to be avoiding trading around these rate decisions. Today, we have ISM. Maybe I'll kind of, like with Bitcoin, maybe I'll bring in the dollar and gold into it. So it actually relates to what we are all interested in. But anyway, ISM manufacturing, that is expected to be stronger. The ISM manufacturing report is interesting, but today when it comes out, I don't think it's going to be really all that market moving. We did have stronger Philly Fed and Empire State, but I don't think it's going to matter as much as ISM services. RBA is expected to raise interest rates. We have JOLTS possibly coming out tomorrow. New Zealand labor market numbers. That's going to be very important for Kiwi. What's great, traders, is that New Zealand labor market numbers are coming out at 4:45 p.m. And so that's going to be before we lay on our trades at the Asia Open. So we're going to lay on our trades at the Asia Open. And so I think, for the most part, this is not going to, we're going to have that to lean into. Eurozone CPI, that's also going to be important. Inflationary pressures in the Eurozone are actually rising. So I'm surprised that these numbers are actually a little softer. We also have ISM services that's expected to be weaker. BOE, no rate change, but the vote is going to be very important. ECB, no rate change, but guidance will really be key, whether or not they signal the potential for an interest rate hike this year. I think it's too early for them to really commit to anything. And then on Friday, we have Canadian and US jobs report at the same time, and we're going to be live trading that with you. So let's take a look at what's going on in the markets on a technical basis before we move to live trading with Boris. I'm going to pop on my BK meters. We're looking at Bitcoin. CNBC wants me to go on to talk about Bitcoin. And Bitcoin is obviously very bearish, but we're starting to see on the 5-minute, 15-minute perspective that we're showing signs of a bottom. This BK trend meter basically shows you where, whether Bitcoin or any instrument is above or below the 5, 20, 50, 100, 200 SMA on the 5-minute chart, 15-minute chart, 1-hour chart, 4-hour chart. This is really great for multiple time frame analysis on your screen. So while you're trading, you may be looking at your 15-minute chart of Bitcoin. You'll see what is the longer term picture looking like. It'll give you a better perspective whether the overall trend is still bearish or not. So right now, Bitcoin showing a little bit of signs of stabilization, but we can see in the 15-minute chart, it's just dropping below the 20 SMA. So at least in this, looks like it's still moving down, but I don't care. I don't trade Bitcoin. Let's look at gold. What's going on in gold? Gold, you can see still very much red on the screen, even though we bounced off the lows. The shorter term meters are showing us that it's turning bearish, telling me that on a short term basis, we'll probably still have some near term downside in gold. There's enough red up here to tell you that we're probably going to see more downside in gold today. That we did rebound. We rejected the 100 SMA, proving to you that moving averages matter. And given that moving averages matter, it's rejecting the 100 SMA. That matters, and I think it's going to move lower. NASDAQ, for those of you that are trading NASDAQ, you can see, unlike gold, yes, I know I'm flipping back and forth really quick. The longer term, one day, it's below the 520.50, but overall, still uptrend remains intact. I have often said that the 100 SMA, which is the red line, is the line in the sand for a lot of institutional traders. Held it here, NASDAQ held it here, it held it here, it's holding here for now. Look at the ultra short-term charts, 15-minute charts. You can see that, yes, we're rebounding, but look, my friends, it's rejecting the 100 SMA. So keep an eye out. This is a key level. There's a very good chance it could reject it and come a little bit lower and see some of these meters turn negative. We'll have to keep an eye on that. 15-minute chart, what we're seeing not much. We had a nice little rally. We still have room, but the shorter term charts give me a sense of pause. Like it's telling me that, gold rebounded. This would be the right place for a rejection. So we'll have to keep an eye out for that. But regardless, the point that I want to make to you is that you want to keep an eye on how everything is moving on a short-term basis. Dollar yen's had a fantastic recovery last week into this week. Almost all green on the screen. And so it tells me if I'm looking at the 15-minute chart, we're going to retest these highs here and maybe even beyond retesting these highs. No major moving average up here. It's what I like to call, my friends, moving average clearance. I always like to look for moving average clearance. And we're above all of the major moving averages on the 1 hour chart. We have moving average clearance. I can tell you in the 4 hour chart, we're already above 520.50, but we do unfortunately have 100, 200 above us. But it's very far. Look at this. 100, 200 is not till 156.50. So we really do have moving average clearance. So dollar yen looks pretty good today for further rally. Euro dollar looks like it's going to get to the 20 SMA. So we have further dollar rally today, which would support the idea of gold slipping further back. Euro dollar looks like we could drop down to 117.50. Dollar Swiss also looks like it could move higher up to this region here. This is obviously very, very important, my friends. Even if you're not trading currencies, spike, it's important to learn that spike lows are absolutely important. Let me get my lines to be white here. Spike lows are very, very important. So just learning how to read charts, how to trade charts, looks like we can at least get up to here in dollar Swiss. We've got a pound dollar rate decision this week. No change is expected. I think it's going to drop further. Reserve Bank Australia, we could get an interest rate hike. We'll see, but that's really definitely outperforming. What I really love is that RBA is trading tonight, but tomorrow morning we'll have the ability to trade the reaction. Kiwi dollar pulling back. Aussie Kiwi are the biggest beneficiaries, have been the biggest beneficiaries of all this risk aversion because they're the furthest from all the mess in the Middle East. They're furthest from a lot of the troubles. NASDAQ bouncing up, off the 100 SMA, looking quite good on that front as well. So, lots of moving parts here. Let's take a look at silver, also moving lower. Do you guys have any questions? We have Japanese election. Yes, you're right. We have a Japanese election this week. Thank you so much for reminding me. And that's why I love you guys, because I can't remember everything. And yeah, dollar yen's going to be on the move. She's going to be most likely elected as, the whole problem, this is like a vote of confidence on whether or not we're going, that whether or not they're going to be able to spend themselves out of trouble. And, if we do have a huge budget coming out from the new administration, it's going to be bearish, not bullish dollar yen. Sorry, it's going to be bearish dollar yen. Sorry, let me rephrase this. I'm going to type this in because I don't even know what to say. It's going to be bearish for yen because that means that they're going to have really big fiscal troubles, which is going to be bullish for the dollar. But we got a lot of other stuff going on. We also have, U.S. government shutdown. If that ends, that's positive for the dollar. And we have NFPs. But if we get, her agenda being passed, that's going to be bullish dollar yen. Welcome here to the stream. We always love our new members. How many rate cuts do I expect this year? I expect 2 interest rate cuts this year. I expect, I expect them to be the new wash to deliver what Trump wants, which is 2 rate cuts, which was really not that much. Yes, gold spreads are skyrocketing, and it's, CME margins are being hiked. This is a good time to bring in Boris, who's going to be live trading gold and NASDAQ for you. We're running up to the open. He can talk about the spreads, he can talk about the moves, he can talk about the volatility. And, those are definitely things to watch out for. If you want these BK trend meters, if you want the BK trend meters, check out the description of the video. Basically, use our code EDGE with any of our favorite prop firms. And send us your receipt and you can get that. That includes Ola Prime, our sponsor today, Think Capital, Tradeify. Lots of you trade with these different firms, and Top One, Blueberry, whoever you want that's listed. And then for Apex, oh my gosh, 90% off, biggest sale ever. That is ending this week. Use the code BKSAVE. You can forward us your receipt. You get the trend meters for free. If you're a BK member, you also get the trend meters for free. We want to get you these into your hands. So make sure you use the code that we have. All right, Boris, you want to say hello?
Hi, guys. And I'm actually going to make an announcement. I'm this week, because we have such crazy volatility in gold, I'm actually going to do an Asia session trade tonight just for Ola Prime today. And I'm going to demo again my Ola Prime scalper for the MT5 accounts that you can get with Ola Prime. And we're going to trade probably, I think these days we have to open up 7 o'clock New York because Asia gets really, really crazy. 8 o'clock is a little too late. So we'll trade from 7 to 8:30. I'll post the link after the show. So be sure, if you're really interested in trading the Asia Open in gold, which has been 100 points up, 100 points down, and you need the absolutely quickest, best possible tool to trade it with, I'm going to trade it all night long with the Ola Prime MT5 accounts that we have. So come and we'll really show you how you can put together the BK tools and our partners' prop accounts to your best benefit. So that's going to be coming up tonight. But today, obviously, we know we're going to be trading. We're going to be trading the futures in early morning. It's already just absolutely crazy. I'm barely trying to stay ahead of the game today with gold because it's just moving 20 points a minute. Really, really, really volatile. But we had a great time. We had a great time yesterday. Thank you all for coming in for that.
How many did you have live, Boris? Unfortunately, I wasn't feeling so well yesterday. Yeah. I couldn't join him. But how many did you have live yesterday?
We had at one time more than 800 people in the room, and it looks like more than 1,500 people watched the stream. And we did a lot of very interesting things. We a lot of people got funded on stream because there was such incredible, crazy volatility in gold. And then, we just basically talked about how important it is that when, the difference between trading the eval account and the funded account is literally the difference between micro and macro. We are not trading any real funded account in gold with more than one. How
do you manage, with these double-digit or high single-digit moves in gold? How are you managing the drawdown requirements?
Well, what we're doing is we're basically capping our losses at 200. If you trade a micro, right, $20 move in gold is $200 up or down move, and that's about the maximum we're willing to absorb. So when you're taking it just a $200 stop against either a $2,500 drawdown or a $1,500 drawdown, you can stay in the game, which is what we're doing. And of course, the trick that I showed everybody that seemed to work really well is if we hit a loss, we just move to our other account. We all have lots and lots of funded accounts. I have up to 9 in Tradovate. I already just funded 3 more accounts this morning. And, the idea is we want to be able to be in a situation where we have 20 funded accounts, and that allows us to rotate out of any losing trades to new accounts. And this way, we don't just kill one account with lots and lots of bad trades. So that really seems to help people.
That's really good advice.
Yeah.
Before I go, I just want to point this out. Boris was trading right during this time on Sunday Open. And the reason why we did, and the reason why he did the session, the emergency trading session yesterday at this time is because we know Sunday market opens, guys, you should know. Huge moves, especially after, the CME raised margins and also, all the big news and yada, yada. 4% drop. I mean, I'm on a 15-minute chart. I don't, I'm sure it happens even quicker than that. 4% drop, 4%, nearly 4% pop afterwards. And then from this level here, where is this? Where's my price range? From this level here, down to over here, 7% over the next few hours. So these are, in some ways it is expected, but these are also the crazy volatilities that you need to learn to anticipate at Sunday market opens. Sunday is crazy, my friends. You always expect a knee-jerk 8 o'clock move. I talk a lot about market timing and how it is very, very important to know what happens when in terms of the time of the day. And Sunday market opens, you need to be prepared to ride the move, ride the reversals, and then wait for the quote unquote real move of the day. Or you could just wait for the real move of the day, right? I mean, if you were just kind of being patient, you could always say, okay, Sunday market 8 o'clock, and I love trading Asia. Asia is my favorite session to trade. Sunday market 8 o'clock, we open there, we get the crazy volatility in the 15-minute chart, we wait for one of these levels to break, bottom breaks first, and then you ride that move. Very classic trade that we also use for news trading. which is you got to be a little patient. I mean, this obviously didn't happen till 12:15 p.m. New York, sorry, 12:15 a.m. New York time. But when the move happens, that's the real move of the day, which I don't want to call it easy, but in many ways it's a cleaner move of the day. So this is one of those ways to kind of reduce the volatility amidst the volatility, I guess, is the best way to say it. So that's just a trading tip for you guys. So I will, see you guys online, check my videos out, and I'll throw the reins to Boris.
Great. Thanks, Kay. Let me just
the video was while you move your screens around, let me answer the question. Boris's emergency trading session was recorded. It's on our YouTube channel. Just click under live and you'll be able to watch the last one. And I love that you loved it from Munich. Oh my gosh, what time was it last night in Munich?
Oh, he was crazy. It's 2 o'clock in the morning and he was trading like a maniac with me. It was so guys, so everybody who's watching, who's new, the most important thing I want you to do is click the follow button on our BK channel, because you're always asking me when do we do live streams? When are we on? And the easiest, best way is if you follow us, you're going to get notification saying, hey, I'm live, and you can always watch us. Remember, live trading is almost always free on the BK channel, and we're doing it 5 days a week and sometimes 3 or 4 nights a week. So there's lots and lots of opportunity to learn and be able to trade all the various different instruments. And the absolute best way to do this is if you're new, just make sure you follow the channel. This way you're going to be always informed. So don't forget, also tell all your friends because obviously, we have a great time. We want you to have a fun time in the markets, and it's always a free experience for everybody here. So guys, let me just kind of organize my screens here. Just one sec. Let me hide the comments, put all the comments on the side, and just a sec. Let me just organize myself. I want to put the sorry, this is the Ola banner is here we go. Use the code EDGE. I'm not sure it's 50% off. I think there might be an old link, but the point is that you will get the absolute highest discount. I think it's 30% off right now with the code EDGE. Just make sure you go to Ola Prime or click the bit.ly link. Let me just put the bit.ly link in here. Let me just put the bit.ly link in here, and you'll be able to trade. But remember, I'm going to do a dedicated Ola session today using MT5, Ola's MT5 product, and our very proprietary MT5 scalper that's going to just make all the difference in the world in how you're going to be able to trade gold that I think you're really going to enjoy. So come today, 7 p.m. I'm going to do this 7 to 8:30 gold opening. But in the meantime, I kind of wanted to just sort of shift our attention to NAS because we sort of abandoned NAS, and there's just a lot of money to be made there. And I want to and I'm talking and I'm blowing this up here. This is a classic. Look how fast that was. Classic trade that we love to do, and there's just a lot. With gold, it's absolutely crazy, but with Nasdaq, it's nice and clean. 10 points, 10 points target, 20-point risk. Not still trading, by the way. Actually, I'm trading just tiny little 1 contracts because again, even with Nasdaq, the volatility is kind of high. But this is just a bread and butter trade that we love to do, which is green dot at session highs, right? We're just breaking session highs, and we have lots of forward momentum, and we just take it and kind of hammer it in. I'm going to try and do it one more time here. You guys saw the trade earlier. Let's see if we can do another big burst up. See if we can make this a little bit higher here. Make it pop to the 10-point target, and we're almost there. And we're done. And this is just much easier on the heart, much easier on the mind. Let me show you the execution marks so you can really see them. You see how these execution marks, boom, 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 straight up, straight up, straight up. And you just like, you don't need to get crazy to kind of win. I just wanted to sort of show you that you don't have to get crazy to kind of win in your prop accounts. If you don't want to trade the world's most what's the word I'm looking for? Heart-stopping instrument right now. That's really the best way to describe gold. It's the world's most heart-stopping instrument. Now, it doesn't mean we don't have to trade gold, but just trading NASDAQ in the gold old-fashioned, hey, let's just run the highs, is perfectly okay. By the way, gold is doing the exact same thing here, but obviously the volatility is going to be much, much greater. And I actually want to rotate out of this account because, sorry, I'm a little bit late, so we're not going to take this trade. But with gold, this would have been a nice, clean $10 trade, $20 target on gold movement. So with NASDAQ, it's 10 points. With gold, it's 100 points. But you just have to really adjust your volatility expectations. One of the better things to do, by the way, and you see how this is just a bread and butter trade. You trade the dots, you hit the spots. We're trading session highs right here, green breakouts. It really creates 1, 2, 3. I would say maybe 2 to 3 bangs against the session highs, and then after that, you're going to start to hit some resistance. And when you hit resistance, you could try to go the other way. Now, I have so many accounts that I can kind of play around with you on some of the ideas of how to play it the other way around. And I'm happy to show you a couple of reversal ideas as well. But remember, all these reversal trades, which I love to do, are by far the less probable trades. It's just that I love to do reversals, my own personal weakness. And if you're going to do that, you should really just allocate it to 1 or 2 accounts where you think you need those reversals, or you want to do those reversals. Majority of the time, you really want to trade with trend. But if we're going to trade a reversal, I want to show you a way to look at price structure and dots to kind of understand, what the potential is and what the possibility of the reversal is. So like right here we go. We made session highs in gold, right, around the 408. And we can't even conceive of anything as a reversal until we get a red dot. Now, if we get the idea is if we get a red, imagine like sort of over here in this particular sequence, you made, near-term highs, you have a red dot, you're going against, obviously the green slope. Your proper structure is to use the stop of the swing high, take the entry over here. So this is a 750 against 763. So $13 kind of a risk. And you can expect, in this case, obviously you get a lot more, but you could expect to try to get 70% of that risk, right? So I'm going to play around with this in the 45 account. Let's move to the 45 account. And I'm in the 46. I want to go to the 45 account. Okay, 45 account. And if the reversal does take place with a red dot signal, we're going to try and do 70% of risk in this thing, and we'll adjust everything accordingly as the trade develops, just to kind of give you an idea of how to trade the reversal. The point is we can trade momentum, reversal, turn, all sorts of ideas with dots that make trading so much more fun for everybody who wants to do different things. But if you're just a pure, straight up momentum trader, hit those session highs with green dots or session lows with red dots, and you're going to be really most of the time in very, very good hands. Okay, so I'm sort of topping out over here, right? Topping out over here. Let's see if this is the 4. Looks like the 4, 817, 800 that kind of can get past this level. They ran it all the way from 4,700 to 4,800, so it's natural for it to rest a little bit here. But we really can't make a move until we have a signal that they're able to close on candle low. So here, this candle kind of closes, just to kind of give you the measurement. This is going to be a pretty big risk. So obviously not a lot of fun. 93 against 17. So that's like a $25 risk. And that means you can expect to try to get $15 out of it, if it plays out. Let's see where it goes. It may not even, it may not even have the red dot because the market is just so volatile here. But let's see. So I'm in the 45. I'm gonna trade one here. Does the trade go away? Trade goes away. No, trade doesn't go away. Okay. So we're gonna trade against this, and we're gonna try and just basically I'm gonna just move this over here and it did get done. Basically, and again, it was a rough estimate, but it was basically 70% of my risk. So it's not a 1-to-1 trade, but it's not 1-to-2. It's like 1.5 to 1, or 0.7 to 1, which is not horrendous. And I could have gotten actually more, as you saw. I just sort of you have to move very, very fast because I have to do a calculation. But the entry here was 16 against 9, so $16, and I was trying to make 10, right? And I don't know what I did, but I must have made close to 10, right? It's just I wanted to show you this particular structure for those of you guys who would like to trade reversals against a major trend. Once you've had a big major trend, it's very hard to trade a reversal unless you have a logical structure. And this is what makes dots such a great tool. It creates a logical structure for us of what is it, where we want to come in, how much we can expect to make, and when does the trade work and when it doesn't work. Natural stops, natural targets. I don't know if anybody did this trade with me or no, because this was super fast. But I did set you up on the whole thing, so hopefully you guys got it. And by the way, this kind of speed is exactly what my scalping tool for MT5 on Ola 5 is built for. Like it's literally almost impossible to have done this on a point-and-click basis like I did, but it would have been very, very easy to constructed this structure with my scalping tool, which I'm going to demonstrate tonight. So if you guys are interested and you want to trade, MetaTrader 5 prop accounts with Ola, I'm going to show you exactly how to do that. All right. What'd you guys do? What do you guys think? You like that? You guys likely like the turn trade? Oh, Sabra, you traded that? Man, what did you clear on that? I don't even know what I cleared on that. Let me see what my ticks were. I don't even know where I came in. It came out. It was so freaking fast. I almost made 100. Almost made 100. I made like 99 ticks. So it's not horrible. And you see the big reversal now in gold after pumping it for 100. Now that they're just kind of dumping it for the next point. So that was a great catch. We could have actually made more, but I liked this kind of a trade. I'll tell you a little secret. That I sort of realized when I was in Miami with all the guys who trade really, really big money, some of the big payout guys, some of the guys I interviewed. You guys want to know what the secret is? Everybody says they trade a breakout, right? Everybody says they trade a breakout, correct? Give me a +1 if you want to hear the secret that I discovered there. The TP is dynamic. In this kind of a situation, the TP should be about 70% of risk. Let's say risk is 200. TP should be about maybe 130, 140. In my case, I think the TP was like 150, and the risk was around 150, so my TP was about 100. But it was super fast. All right, I want to see more. There's actually a lot of +1s. All right, a little more +1s. Come on. Let me share with you. So the big secret, well, it's not really a secret, but just kind of like when you think about it and you understand exactly what everybody's doing, is that the guys who really make big money are actually not trading breakouts in like the classic sense of the word. they're trading what I would call turn breakouts. So what they're doing is they're doing exactly what I kind of just did. They're looking for that turn around the pivot point, either here or there. For example, there was a great trade in NASDAQ on market close where the NASDAQ was just dripping lower. It was nowhere near an uptrend trade, but then it finally turned up. And as it turned up, it did like 100-point move. There was a guy I used to work with, Kathy and I used to both work with. I used to love him, Jimmy Satel at FXCM. This guy kind of took him under my wing. He actually even lived with me in my apartment for like when he was, because he was just a young kid out of college when we hired him. And he had like no money, and he was waiting to get an apartment. So he literally lived with me for like a month and a half. Great kid, but he went on to become a very, very good technical analyst and a money manager then later on. And Jamie used to always say that the biggest trend starts with a turn, right? And if you kind of think about this, if you sort of just even look at the chart, right? Where's the trend here? The trend really isn't starting from here. The trend is starting from here, right? If you look at it over here, if I were just to mark it. And that thought of like, that it's actually the trend starts with a turn, I realized that's what a lot of people were doing in Miami. They were just trading the turn. Now, of course, you're going to lose because the turn, sometimes the turn just, flips around. And you obviously want to have a good structure for how to pick up a good turn. But that's what they were doing in effect. They were really catching the turn early and then turning that into a big trend move. Just like, here we just took the turn, we didn't turn into a trend move. And there was, of course, a lot of other techniques that they were using that I think are very interesting that we'll try to employ as the days go by. One of the things that they were using, for example, is when you hit it, when you sort of get this turn, right, they would take some off and they would just literally trail the trade. And this is how they made a ton of money, where you're coming in, you take a little bit off, and then if you really, really catch the V turn, you just trail it up, and the last piece of it becomes like 3 to 4 times your risk type of model. It's very hard. I personally have a very, very hard time doing that. I do have a solution, which I'm going to have for you guys maybe in a couple of months. That's going to make it a lot easier. But just from my own perspective, I'm like one in, one out. Let's keep it simple kind of trader. But for those of you guys who are happy at trailing stops and targets, using dots to pick the turn and make the trade is very, very interesting. So it's like the most interesting part about, I think, takeaway from Miami was that people who trade trend are actually trading turn. They're just simply catching the big. They're calling this whole slice a trend. They're calling this whole slice a trend, right? And that slice actually traverses the uptrend and the downtrend, right? Which is kind of very, very interesting. So I thought I'd share that with you because it was kind of cool. What do you guys think about that? Interesting, right? Let's see what the MNQ is doing. Oh, MNQ, fresh session highs. We got to go hit this. Bye. Come on. 11, 12. Maybe we're a little bit overextended. Maybe I bought the overextended, I don't like to jump impulsively into it. This is fortunately a very, very small position. But maybe I hit the top. Let me see if can this extend a little bit more? Can we give Boris a 10 lot? Can we give him a 10 point? Let's go, baby. Come on. I'm hitting such good trades in gold, making 100 points in gold. Can I just make 10 points in NASDAQ? This is a good trade, but this is just a massive, massive candle. And this is typical, where I could be right on the trade and wrong, right on the direction and wrong on the trade, just simply because it's going to retrace against me. This is the volatility here was 42 to 90. It's a 50 point candle. And I just jumped into it because I was just didn't impulsively, because it was 2 seconds left on the candle. I should have just simply stopped myself from doing it. If I get clipped, it's going to be a tiny, tiny little loss for me. So no big. Yeah, I'm still way ahead on this account. And actually, if you guys want to have fun, right? You guys want to have fun. Let's try. Let's see if this stays red. Let's try to turn trade on this thing. If it stays red. Because again, this is the same principle, the idea. We made session highs. We haven't been able to exceed the session highs. From here to there, this would be like a 870, it's 30 points. So you'd be looking for like 15, 20 points, move, sell. Let me see if this is going to work. All right. So I'm going to put myself over here against, this is a natural stop. Right, and let's see if I can make myself on the target. Come on! It was so close. 3 ticks away. Too bad. I just missed the turn. But the point is with the turn, with NASDAQ, when you're trying these things, your risks are just so much less that none of these things really hurt you that badly. But let's see. Me, come on. Look how it's teasing me. I could have just closed myself manually, but I really wanted to be stubborn and get hit on the target. That's annoying. That was just so painful, guys. I mean, basically, my entry was a little bit off the mark. The target, the low was 62.75, and I'm sitting at 61.50. Literally three quarters of a point. I was off, and now it's going to torture me. Fortunately, it's a tiny little trade, so I'm not gonna cry about it. And I could have taken it twice if I was if I was off screen, I probably would have taken it because I would be watching it a little bit more carefully. But I wanted to demo the trade. I mean, the part about live trading is, of course, that I demo the setups for you guys, so then you can then go there and practice them yourselves in much better fashion than they show up on the demo here. But the principle, I think, is just really cool in terms of you understand the structure, you understand the movement, you understand what's happening with the price action, and then you get tortured by NASDAQ for five candles. Come on, die already! No, all right. I'm not gonna cheer this on because if I do, it's just gonna torture me more. Let's go look at gold. The best way to get rid of a trade is to not look at it. Now gold is starting to really collapse a little bit. Back down to essentially 47, right? Back down to 47. See, by not looking at it, we actually made the trade. I actually did the trade. So this was the trade. Let me show you. Oops. It's always like if the more you watch the trade, the less it wants to cooperate with you. So this was in, and we bought it down right here. Just boom, nice and clean, straight down, on the reversal. So it's very cool. You could trade the momentum, you could trade the reversal, depending on your structure and everything else. Yes, I'm always waiting for the candle close, Ben. I came in on the candle close. I just got a little bit bad execution because I was a little bit late on the move. But that was a candle close trade. It's always a candle close trade on the moves. So then the other thing that I really want to show you with the dots, kind of just in a purely simple way, is the following. There is nothing better if you're just a pure natural trend trader than to trade the resumption of trend. Like my friend Rob Hoffman, that's his bread and butter trade. And the thing is that the dots can just give you that resumption so cleanly. And what I mean by that is, let me kind of show you. So we have trend. First of all, we have major trend, right? Positive trend. Then we have positive near-term trend, which is green, right? And you have, like right over here, we have a red dot followed by the green dot. That's the continuation trade. Red dot, green dot in an uptrend. So in this particular case, what we need to do? We would need for this thing to turn green on the slope and have a green dot, and then we would have a continuation trade in the move, right? Which I think is kind of very, very cool as a move. Now, there's one other really important element, which in this case you don't necessarily have, and that's why this may not necessarily be a good continuation move. What you want to trade the truly great trend continuation setup is one where you're making fresh session highs. This is to the upside, and obviously fresh session lows. So in this particular case, you can see, you have red dots, green dots. That's pretty much making session highs over here. So it kind of stays. It comes back up. Even over here, you have a situation where you have red dots, green dots, and it's making session highs. Now, once it starts making green dots, not from session highs, but from much lower perspective, your chance of kind of getting an extension is smaller. You're coming in not from session. You see how, like over here, you're at session high. Here, you're at a lower swing point. You don't have nearly as strong a continuity move as you do the other way. So in a way, if you're not at session highs, that's not as good a strong continuity trade as it was in before. Here you're at session highs, and the next green, big green trade over here or over here still allows you basically 52. This is only like, it's 40, 20. You do get a little bit of a retrace here. You need a little bit more space, but then the next one picks up. And you kind of clear to see, like in a perfect world, what we would love to see here is candle go back up to 25,800, right? Like if we had a green candle to go make fresh session highs, I absolutely want to trade that. If we're sort of over here and it kind of tries to rally back up, that's nowhere near as good a continuation trade. The reverse, the turn trade is super clear. Like there is, because the turn trade is always coming off against very, very clear, definitive high trades, but the continuation trend trade really needs to see fresh session highs to kind of make it really, really good. And that's a nuance that a lot of people miss. They just simply say, "Oh, I got a green dot after red dots. I want to go long." But no, where are you in the field of play? Are you sort of in the middle? Are you back in your? If you think of like the field of play as like an American football field or a soccer field, right? If you're this is the opponent's goal, or if this is the touchdown zone. If you're near the touchdown zone, yeah, you want to go. But if you're kind of operating from here, you got a whole field to go, and that's a much harder, much lower prob. Like it's much. We all know that if you're in the 10-yard zone. Your chance of scoring, I don't even know what the statistics are, but your chance of scoring is much higher. If you're in a penalty zone in soccer, your chance of scoring is much higher than if you're in your own if you're near your own goalkeeper, right? Just basic common sense. Same idea in trading. If you kind of think of the session box as the field of play, as the football field, you definitely want to trade. So this is relatively close to the thing, and we definitely do want to give this a shot, because it's a reversal trade. We're getting the green slope. We hope that that it will extend. 27 seconds left. We're going to stay very, very patient with this thing. I'm actually want to go to, let's go to the 46 account. Let's go to 46 account. 46 account. Okay. I got 10 seconds left. 3, 2, 1, long. All right. We're at the 46 count. Pretty good entry. Let's see if this works. 86.5. And it does. And, I know I was just basically babbling for a very long time, but the babble was the explanation for why it works, right? And now you guys see that the continuity trade in the right location, boom, nice and easy. Oh, OTR. You got the payout, dude. How much? Come on, spill it, baby. Come on, OTR. We want to see it. All right. If you don't want to say it, it's okay. Okay, let me just ask you, yes or no, more than $10,000 bucks. Are you getting paid out more than $10,000 bucks out of Apex? Come on, baby. Come on. Tell us. Because you need the chicken song. We're going to give you the chicken song. Here we go. I'm going to give you the chicken song. Hang on. You absolutely deserve the chicken song. Where's this? Nice. Oh, this is the best. OTR. This is great. Oh, that was great. I'm really, really glad you got that. That's awesome. That is just absolutely, absolutely awesome. Congrats, OTR. Safe driving, happy trucking. It's true, man. I hope you buy yourself a whole bunch of coffee for the road and everything else for the road. Do you ever, hey, OTR, do you ever drive where there's a Buc-ee's? I've never been to a Buc-ee's. I would love to. I hear it's an absolute cultural experience. I'd love to go. Oh, that's great. Oh, Buc-ee's doesn't allow parks. Doesn't allow park. Oh, I didn't even know that. But isn't that okay? So isn't there like a Buc-ee's for trucks? I heard there are these super luxe stations for trucks too, right? Anyways, congratulations, OTR. That just makes my life. You just made my day today, because that's really what it's all about. What's really all about is me showing you the setups and you guys converting those setups to successful prop trading. You know, there's 100 different ways to slice an apple, and I'm just trying to show you several really good ones, really intelligent ones that you could take to the bank, which OTR obviously is going to take to the bank, which is great. It's really, really awesome. You know, it's never about my account. It's always about your account, which is great. Oh, across the road from Bucky's Trucks Can Park. I didn't know that. Okay, that's cool. Anyways, that's great. OTR, that's freaking awesome. I'm so glad. Tell me that the dots helped you. Please make my life, make me, give me my Monday, make me a happy Monday. Tell me that the dots helped you. That's awesome. So all of you guys who are trading, just want to let you, first of all, a whole bunch of Europeans, whole bunch of emerging nation guys who may not be able to trade futures, and even a whole bunch of Americans who may want a super clean scalping tool that's going to turbocharge these scalps for you. Don't forget, I'm going to do a special Ola Prime time special, Ola Prime time special, 7 o'clock tonight. We're going to trade gold only. Maybe we'll trade a little bit of NAS, but we'll trade mainly gold. We actually could probably even trade NAS in there. And I'm going to show you the same setups, but we're going to be able to use it with a really good tool. So hopefully you guys really like it. Anyways, guys, I'm having a very good day. I'm, green on the screen. Three funded that I have to wait until 5 o'clock today to kind of turn green, which I'm going to do tonight. We'll also, I haven't done much on wealth charts, but we'll do a little bit of wealth charts too, as well. That's interesting. I'm looking at gold here. What's gold doing right now? As far as trade. So this is a good example. I wonder if I can get bigger on this. It's a very, very good example of kind of what I mean about your position is just as important as your structure here. I think let me just take a look at gold this way just to see. I'm going to try to replay this a little bit here and see what this would have played out, because we didn't get a chance to obviously trade gold, start new. So if I was like right here, so we were at the turn, the thing starts turning, right? Go 1. Okay, so negative trend, red dot. Really not a trade. Like, even though this would have worked, I'm trying to figure out, would I have traded gold here in this sort of mid zone? And the answer is no, because I'm really in the mid zone, Yes, there's opportunities here, but you're in the mid zone. You're not at session lows. You could even sort of trade the reversal here at 7-11. This is a massive one though. This is like $40 worth of risk. I wouldn't have taken, because at $40 worth of risk, you're basically you have to make $30 just to kind of make this worthwhile. It's too big a risk. I wouldn't have taken this reversal. But it went 51.70, $20 worth of moves. It would have worked, but it's just chop. Like you're mid zone here, right? You're mid zone. So it's not, you see how you're not getting any kind of true continuity or true moves here. But here's what you are getting a little bit here is it's still choppy. There's just nothing to trade here. Even though it looks like there's possibilities here to the downside and to the upside, you're kind of mid zone. It's just not really high probability. If this thing starts breaking the 47s, that's where you want to be. If we start to stall, and not make any fresh lows here and start making sort of swing lows where, you know, where we're not making any fresh lows and we get a green dot, maybe it's worth trading a turn trade. But trading a continuity trade mid-zone here is just not that interesting. So sometimes, even though there's trades, they don't really offer you great opportunities. Can you get BFF for wealth charts? You can if you're part of coaching. Yes, absolutely. Just email me, and we'll put you in there. By the way, coaching, if you guys are interested, coaching this Thursday as always. Let me put the link in here. So, you know, it's the very cool thing about kind of looking at session high, session lows is that you don't waste your time with chop, right? You sort of wait very patiently to see where the reaction points are. Now, this is actually starting to, you know, come down towards the session lows. So it's interesting, because here we're either going to make a bottom and then it's going to be a really great looking turn, or we're going to start drilling all the way down below. You know, this thing starts to go down to 4,500, which is going to create even more liquidation and even more pain for everybody who's trading. In the meantime, let's see what NASDAQ is doing. NASDAQ is just running session highs. So, you know, my apology. We traded NASDAQ really, really nicely all the way through, but I've just sort of been riffing, and OTR just did such great news for us. We kind of took our ball off the ball. But if you were trading, you know, green dot session highs, you had 2 or 3 trades. Now this already hit 3 winners here in a row. That's it. It could go to like 26,000. It doesn't matter because eventually it's going to start turning against you, and you're going to start eating those trades. So it's up to you. You know, there are guys who will trade 5, 6, 7 continuity trades, and when it's a strong trend, those are really, really good trades. But my preference is to just give myself 2, 3 winning trades, which we did really nicely in NASDAQ with very little risk here. And now, you know, now we can just kind of pause. Maybe we'll see if we get another you know, red dot turn trade here a little bit in NAS. And see what so gold is trying to hold this double bottom. I'm going to try, let me see if I can find an account where, let me see where I want to find an account. I already did well in this one. 47, 49. These are all small accounts, 49. All right, maybe we'll do the 49 account. Let me see if I can do the 49. We're going to just try to trade the gold turn on the 49 account. Okay. All right. Boom, 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 boom. And I'm just going to, oh, come on. God damn it. All right, I'm just going to, oh, there we go. Okay. Nice, clean turn. I wasn't going to fool around because gold is volatile. I made about 70 points on that really, really quick turn of the 49 account. So no complaints. That's nice. That puts me at $150 in that account, which is, my goal is to make $100 per each account. And I'm pretty much there with all my accounts. I have like 2 accounts that are just a little bit underneath there. But that's it. Like, you just have a target, you have a goal, you hit it straight. Good luck, OTR. Thank you, man. Good job. Good job for everybody. Good job for him. That's great. Great to have him around. But anyways, you see what I was doing here? Like, just to kind of show you, we talked about this all morning long. I try to show you this the whole idea of me showing you the setup. What are we looking at here? We had no more lows. We had a white dot turn, which is a green dot turn, right? I just got long here on the idea that this was going to be a turn trade, right? And in the mid zone, right, the turn trade is the much better trade, right? Because that's the chop that turns around. Anybody take that turn trade with me? Now, if I was sort of really, really, playing this classically, I would have traded this this is a 40 against 16. That's like $25 worth of risk. You would have gone for $15, which is, you only got $10 extension. The thing about this is that there's theory and there's practice, right? Because the volatility is so massive here, you literally, do you really want to risk 250 ticks on any given trade? You don't. So my view is, okay, I'm not gonna try to go for the full 55 against this potential stop, because we can have exactly what this is happening now, kind of a U-shaped move. You have this theoretical model, and then you have to have the practical application. And my practical application was like, okay, fine. I'm like up 60, 70 ticks in less than 20 seconds. I'll take it right now, because my thesis that this was a turn trade was true. Now, if this is a long, truly a long-term turn trade on a nice big swing basis, then you definitely can make a lot more money. But I don't have the patience and I don't have the desire to find out if I'm right or wrong, which in this case looks like I could be wrong here, right? We'll see. I mean, right now we're holding these lows, but we can always break these lows. And the move here was just a small slice, small scalp, which is fine. The more important part is to understand the psychology of price action and take advantage of it when it presents you with decent opportunities, right? As we're looking now at gold, it still continues to hold its lows, still continues to not make fresh lows. So imagine a situation where we get a another white dot or green dot that would give you confidence that there's possibly more of a turn trade going on, right? We could take another turn trade, but this time with a little bit less risk, and maybe this time with into a different account, right? Maybe the 50. Maybe I'll take it into my 50 account or 51 account. The idea here, there was the other thing that I sort of really realized when I was in Miami was that everybody who was a successful trader had a model, and then they selected what they thought was the best. They didn't take every single trade of their model. They were very, very cognizant of context and took only the few of their models, a few of the trades of their model. And that's what made them so good. There's always discretion, or an element of discretion in what you're doing. And that element has to be taken into account. How much risk, how much volatility, what if, is this really worth it for me to take this trade, even though it may be part of my model? All those things come into the calculation when they were doing it, which is really interesting. By the way, so, okay, we're holding the lows, but it's hardly a vote of confidence for the bulls, because they just keep drilling it. It looks like they may want to come back and test the 4,700. And it looks still like the selling flows are dominating. That we had this big buying flow in the open, then everything else starting to dominate on the selling flows. Whereas what's NASDAQ doing? NASDAQ is holding steady at this 25.9. But NASDAQ, of course, is a much lower. The irony of the whole thing is that NASDAQ is now the safe asset, right? Because the volatility in NASDAQ is so much smaller that we can, when we are setting up our structures, it's like a $20, $30 bet instead of a $200, $300 bet in terms of volatility. And that's a huge difference in being able to absorb negative trades against you. I'm just watching NAS. I'm trying to see, are we topping out at this 25.9, at least in the very, very near term, in the sense that, we have a natural stop, and are we going to get a red dot in which we can try to trade our turn reversal trade? Tune, you're short gold now? Okay. Let's see if that works for you. You need to see gold drop to the 4,700. That's if they can drive it there, then you're gonna have fresh session lows, and that's gonna be the trade. Oh, so I'm not gonna be able to trade with you on the close, but here I want to show you guys. Want to see the other great trade that I found out of Miami that a lot of the other guys were doing. That was kind of very interesting, and it actually is. I actually saw the same idea in the reverse side on gold. So let me actually show you the gold trade today, where this happened, and I really traded this hard. Okay, so this is the 8 o'clock bar in gold in New York. This is the 8 o'clock New York bar. You want to watch this bar very, very carefully, because this is the official market open. This is like when the futures open up and customers who, may hold orders overnight or whatever. This is where all the big dump happens on the market open. And the direction of the dot on the market open bar very often gives you continuity. So like this is a red dot. Obviously there was just massive. I actually made a huge amount of money on this continuity because it was really, really wide. It was like 40, 50 points of movement on the move down. So that's an interesting idea. And we can look at this. We can look at the Friday. I'll take you to Friday on gold, but then I really want to put your attention to NASDAQ on the flip side of it and try to explain something else to you. Okay, so here we go. Okay. So here we had very, very little movement. Interesting. 7 o'clock, 8 o'clock, market open, did not do anything. So there was nothing here. There was no volatility, no movement. You could have traded this. Is that, maybe I just, it's all compressed. Maybe it's all compressed. I'm sorry. No, so this is the big vol move, right? So the thing is, here you see the 8 o'clock candle gives you no signal. That's the thing. That's what I meant. Yeah, this looked smaller because it's 513 against. Oh, this is a huge candle. It was just simply compressed. It looked tiny on the chart. So, but the thing is, the candle gave you no direction. So there was no trade. There was no trade, right? And maybe we'll do one more for Thursday, just kind of show you. And then I want to come back to NASDAQ and just show you this one other potential trade that's kind of really, really cool. All right, back to Thursday. Okay. Also, really no movement on the move, right? No trade. So nothing there. But the idea is that 8 o'clock is the market open. In NASDAQ, there's also a market on close trade, and that happens at 3:50 every day. So if we go to Friday at 3:50, I want to show you something. That's 15:50 on. Oh, sorry, we're on Monday. Let me go to Friday. Okay, here's Friday's price action. This is so it's 1550, right? We're looking at the 1550 candle, which is a really big candle, actually. Oh, here it is. Yeah, the 1550 candle. Look at this 1550 candle. The direction of this is a red candle. You had literally whatever, the risk is here, 730 at a 40-point risk. You had an 80-point move to the downside, right? It's really interesting at where the flow is. And the more important point is, like, this is just Friday's price action, but take a look at the Thursday's price action too. And the direction of the dot at that particular time, very often, assuming you have a dot. If you don't have a dot, then you don't have any trade. But here's the Thursday 1550. Look at this move. 1550, market on close, huge amount of continuity, right? It's a really, really interesting single minute trade that you could put to use. Basically, the idea is your risk is the candle, and then you can try to figure out what your rewards are. Your reward here was like 2 times your risk, but it depends whether you want to scalp it or kind of swing trade or anything else. Regardless of how you want to do it, it's just very cool. I just thought it gives you some really great insight. Oh shoot, I just missed my. All right, so we just missed this trade a little bit here. Let me see if I can do this. I'm not loving this trade because I have to risk all the way to the top here for the reversal move. I should have been in here. I took again. I'm showing you this is just me taking a bad execution to show you the thesis of the trade. You should have been in at 78, and obviously we would have totally resolved the trade already right now. As it stands right now, I'm just going to take. I can't even take this quick trade here because I'm talking. Yeah. So the opportunity was here. We short to the reversal to the scalp. We would have been able to take that nice 10-point move here against this particular trade. Now I'm going to have to float this thing forever. I'm just going to take it. I'm going to take myself out cleanly. Just show you the principle of the trade. When you're trend trading, you think absolutely the best trade is to buy at the top. No. After 2 or 3 buys at the top, the high probability trade is this one, where you have a signal for a turn and a move to the downside. And it's actually, by the way, moving nicely to the downside. You could have taken a trade now. So that's sort of like the last thing I wanted to show you today. There's a lot of stuff that we did really, really well. Rewatch, if you want to watch how we got funded very quickly, rewatch the beginning of last night's trade action. That's really the easiest way to get funded right now. And I'm up to 3. I'm probably going to try to fund another 2 accounts today, and then we'll go from there. And then we should be really, really full up on funded accounts. I'm going to manage them in a really proper, intelligent way, both on the continuity trades, the turn trades, market on open, market on close trades, lots of different ways. So that's it, guys. Any final questions, let me know. As I said, 7 o'clock tonight, I'm going to post the link very, very soon for Ola Prime. And we're going to do an exclusive Ola Prime with my particular tool set, so you guys can really get crazy with it, okay? No, George, don't. No. What you have to do is then you have to take that eval and upgrade it to a funded account. If you trade that, you're going to lose the eval. No. Don't touch it. Once you pass the eval, don't touch that account. I actually, you guys want to hear a stupid thing I did today? Okay, this is just, I don't really care because they're so cheap. But I did this. This is the first time, the only time I've ever done this, because I had so many accounts and Kate was like in my ear. It just bothered me. I wasn't paying attention. I had funded an account last night, right? And I didn't realize that I was setting up a straddle trade on that account that's already been funded. I was trying to set it up on the new trade, and I burnt the account that I had funded. So basically, I funded it and I lost it because I didn't wait until the 5 o'clock hour. It doesn't matter because in the next minute I got funded again. But just don't do something stupid like that. Do as I say, not as I do. Back in the old stuff. Gold is at session lows. Yeah, gold is cranking. Let's see what gold is at. I missed this. Guys, there's only so many setups like we can do. But yes, red dot session lows, definitely an opportunity for us. This would have been a trade. This was the trade that we could have had some extension on. I'll leave you guys to it. There's enormous amount of setups that you guys can do, and don't trade the evals. Don't do that. I'll see you guys tonight for Ola trading. Thanks so much, guys. Everybody have a great day. Bye-bye.